Hey guys, John Bellamy here, Actionable Intelligence. Today is Saturday, November 16th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I'm not a registered financial advisor. I'm just a guy on the internet. I cannot give you personal financial advice. Please do your own due diligence. It's your money, it's your responsibility. Okay, lots of big news this week. So, from Jesse Felder, this is one of the things that I've been expecting is going to continue regardless of who's elected or what happens, and that's higher inflation. So, what's this tweet from Jesse Felder say? It says he's quoting somebody from the Inflation Guy blog. Quote, if core goods is no longer declining, talking about the price, if core goods is no longer declining and shelter isn't doing the heavy lifting of deflation, and if core services ex shelter, super core is leveling off, then gosh, that looks a lot like high threes, low fours is where inflation settles in. And so this is part of the problem. I didn't really hear during the election cycle. I mean, there was nothing from the Democrats except to put price controls in place and, go after, quote, price gougers. That wasn't going to work. But I didn't really hear that much from the Trump people. I heard Trump say, lower energy prices, drill, baby, drill. I heard Vance say the same thing that if we lower energy prices because energy is such a big input into everything, that would have the effect of lowering inflation. Um, but the problem with that is, as I demonstrated and last week in the weekly video, a lot of the major producers are not have already come out during their Q3 conference calls and said they have no intent of doing drill baby drill. For example, Chevron, who is approaching 1 million barrels a day of production in the Permian, said very that they plan on plateauing their production around 1 million barrels and focusing on what? Ding, 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 cash flow and return to shareholders. Okay, and there were several other smaller uh, but yet significant Permian producers that basically said the same thing. So, it's kind of a catch-22. If you drill, baby, drill, you crash the price of oil or energy, and then they can't make returns, and we're back into that 2015 era, and that's just not going to happen. And so if that's the only thing that they have planned or hanging their hat on, I think they're going to be in trouble. The real problem is and has been excessive government spending and money creation to support that spending because of the deficits we're running. If you eliminate the deficits, which is going to be very difficult because entitlement spending and transfer payments are about 77% of the budget, then, you're going to have a weak economy. And so there's no magic wand. They've painted themselves into a corner. We're at the day of reckoning. Okay. And so um, you could probably survive if we wouldn't have had the post-pandemic 30% inflation that's embedded now and people can see it. They probably would be on a slow boil like you boil a frog at 3.5, 4%. People wouldn't like it, but they wouldn't really notice the cumulative effects like they do now because it would hit them so hard and so fast. And so the idea that, well, if we can get the inflation rate down to 2%, okay, so now after a couple of years, you have 34, 35, 36%. We've talked about this ad nauseum. People don't understand how this works. And so the things that need to be done to fix this are not politically possible. I know everybody's excited. I'm not blackpilling. This was all set in stone over the last 4 or 5 decades. And you basically need to do what Milei did in Argentina. You need to come in and just slash and burn everything. You need immediate cut to the defense budget of 90% permanently. Yeah. You need to cut entitlement spending 25 to 30% permanently. Is anybody talking about that? It's not politically possible. So it's not politically possible to do what's required to fix this. And what is politically possible is not going to be sufficient to fix the problem. I've said this many times. And so this will become apparent over time. And this is why, the recent pullback in gold and some of these other things, I'm not really fazed by. We're in a long-term secular bull market in tangible assets because there is no way to this out except more inflation, regardless of who you elect. Okay, regardless of who you elect, it's just not going to happen because the real problem is things like the defense spending. The real problem is the automatic spending on entitlements. Okay, which I don't like that word, but people expect to get these benefits. I've talked about this multiple times, okay, that these are nothing but these are welfare payments. That's all they are. That's what the Supreme Court decided. Okay, and people think that they have this annuity or this account there like it's a IRA or 401k, and I paid into it, so it's not going to happen. You're not going to have your benefits cut. You're just going to be paid in currency that's increasingly has less purchasing power. That's all. And so that's why we can have this little post-election euphoria and we'll have to reserve judgment and maybe some things can happen. And I think maybe there has been a change because one of the things I'm excited about is this is the first kind of new government that's coming into place, with the exception of the president, uh, where you have a lot of like Gen X people or millennial people, right? People that are younger with fresh new ideas. And so, if nothing else, I think that's the baton passing and sea change that we've seen that will continue over the coming decades. But you're not going to fix this problem. It requires a massive crisis to fix where the wheels fall off, and then there's no other choice but to fix it. Okay. No one's talking about cutting spending, and I'm going to talk about this more. You just crossed $36 trillion in debt. So nothing's going to change. Yeah, they're going to do some things around the margin. I will I will bet anyone $10,000, I'll put it in escrow, that Elon Musk and Vivek will not cut $2 trillion out of the budget. This has all been done before. The interests are too entrenched. This is not how our system works. You have going on like almost a $900 billion a year defense budget. That is deliberately parsed out all over various congressional districts, specifically so that it can't be cut. Okay? Again, the things that need to be done are not politically possible in the current environment without a crisis. And the things that are politically possible will not be sufficient to fix the problem. Now, they can reform the government. I'm all for that. They can cut the fat. They can try to make things more efficient, but government itself is not efficient. Elon's not going to walk in with a sink like he did at Twitter and fire 80% of the people. It's just not going to be allowed. It's not going to happen. They'll impeach the president. Both houses would, including Republicans. It's not going to happen. Okay. And so I'm not that worried about, again, I'm not blackpilling. I'm just telling you how the system works. People can be optimistic and euphoric, but you have to temper that with reality. And so if they do it and I'm proven wrong, well, I'll be proven wrong. But I don't bet on that. Um, this it's just not going to happen. Now there will be some fireworks, there'll be some high profile stuff, and there'll be, hey, we found this agency that's been around since, 1790 and 100 people work there and don't really do anything, so we're going to save $30 million. Well, okay, and that'll get posted on Twitter, and they'll rack this stuff up. But entitlements is where the problem is. You have 100, depending on how you want to do the math, $100 trillion plus in unfunded liabilities. That's your problem, and no one's talking about that. Not even Elon or Vivek or Trump or anybody in the Republican or Democratic Party, with the exception of maybe Thomas Massie and Rand Paul. So maybe, the idea is, well, this is a first step, but you don't have the time. You're racking up debt and interest, uh, you know, and you're not going to be able to cut rates now. The typical rate cutting cycle is 500 basis points, 5%. You're not going to be able to do that in the current environment. Not if inflation gets stuck at 3.5 or 4%. And what happens if inflation starts accelerating again to 4.5%, 5%? I mean, the media is going to be all over Trump. So what's the plan? And you're only going to have about a year where you can blame it on the previous administration. Then you're going to own it. So we'll see what happens. But this is what I think your future is. This is why I'm bullish on tangible assets. Again, your your life, your financial well-being really isn't is going to be measured about with how much you understand what's really happening and not getting caught up in emotion and things like that. These are math problems. They're white colored, they're vanilla flavored, they don't change. Two plus two equals four. And you know, the things, unless somebody wants to tell me how they're actually going to do this, because I just don't see it. When you have a two and you have a two, Congress appropriates money. It's a 2-year election cycle. Where's the incentive to think 5, 10, 20 years down the road? There is none because you're worried about the next election. It's in 2 years. It's the same thing with the president. You have maybe a year and a half to 2 years to do something. Then you're going to have a congressional election, which typically means the party that's opposing you picks up seats. And so you get stuck in the mud. You see what I'm saying? So some things can be done around executive orders. Maybe there's a change in tone generationally going forward that we have to fix these problems that our grandfathers and fathers created. I get that, but that's not going to happen in the next year or 2 or 4 years before you end up having a crisis that's going to make you fix it. It's my point. So let's talk about selling overvaluation and buying undervaluation. So here's a chart that is from the Daily Shot, but it's grabbed from the Bank of America Global Research. They put a lot of good information. A lot of people grab their stuff and disseminate it. This is a 75-year high in U.S. stocks versus the rest of the world. U.S. versus global ex-U.S. equities relative price performance. And so what you see here is right now you see going back to 1950 comparison of the U.S. versus global equities, and you see like um, these are standard deviations, okay? And so in the past, like going back to the internet bubble, we had a crash in the internet bubble when the U.S. was 1.3 standard deviations above what global equities were trading relative to global equities. The Nifty 50 bubble back in the 60s, early 70s, maxed out slightly below 1.8 standard deviations. The US market versus the global market, you know, rest of the world, is now about above three standard deviations. And if you're just listening on the podcast, the chart is really will shock you. And so the question is this Is this reasonable? Can this continue? Yes, it can continue. Is it reasonable? No. Is it way outside the norm? Yes. Is it ahistoric? Is it hist historically what has happened in the past? You have a massive correction where you either see U.S. equities come down relative to global equities, or you see global equities move higher relative to U.S. equities, or a combination of the both. So this is why I'm so bullish on emerging markets and other foreign outside the U.S. investments. The argument we made, well, you don't understand, John. The U.S. is the best place to invest. It's a technological leader, uh, what have you. We have the best startup culture. Yeah, I understand that. Those are all valid in arguments, but valuation ultimately matters. And again, going back, you can play this time it's different, but it's never different. And so people say, well, why is Warren Buffett building up this cash that he's building up? Why do you see, uh, we have all these extreme valuations in the US that are assuming that this is a new era of, sugar plums and candy and cake for lunch and dinner. It's just not reasonable. And so can it continue higher? Absolutely. Things can even get crazier. Okay. But ultimately, when I find things in other countries trading at half of book, with the company growing, returning cash to shareholders, uh, double digit dividend yields. I mean, this is where I'm going to put my money. Okay. Uh, I just, when I look at this going back to 1950 and several other times when we didn't even get above two standard deviations and we had massive corrections, we're now at three standard deviations. And so nothing can keep going like this forever. Uh, can I tell you the exact date and timing? Maybe it goes to four or five. It's possible. Anything's possible, but it's not sustainable. But just because something's certain doesn't necessarily mean it's imminent. And so people will continue to put capital. Part of the problem here is the whole passive investment schemes that we have, where these money comes in from unthinking people via payroll or withdrawal into 401ks and these target funds, and they just keep going into the, you know, highest capitalization stocks in the indexes, which drives this. But at some point, this will be a problem. And when it reverses, the exact opposite will be true. Here's another example. This is from Top Down Charts and Callum Thomas on Substack. He puts out a lot of great charts every week. I don't subscribe to his chart pack, but these are just a lot of the free charts he puts out or what I see on Twitter. Here's, market cap weightings here of semiconductors. We're approaching, this goes 1973, and it shows the market cap weighting of the semiconductors, I guess I would presume, in the overall market. And again, we're at all-time highs. It's another chart that's went straight up. We saw something similar in the internet bubble, 99, 2000, where semiconductors, the market cap weighting during that bubble almost reached 4%. It went straight up during that bubble and then came crashing down. Now we're in something similar since last year, or since basically this whole AI situation, and it's blown up and went straight up. Things that go straight up don't keep going straight up. They typically, I can find you many, many charts where they come crashing back down. And so something is going to happen, some kind of news, some kind of sentiment change, and when then the tide comes out on this. This is totally irrational exuberance. And people, again, that will challenge me. They'll say, well, you're wrong for the reason. Well, the market will find out who's right in the end. Just because you're right during a bubble, and people do catch bubbles and become very wealthy. We talked about the guy that took 75 or $80,000 and turned it into 400 million trading Tesla stock and options. And then he lost it all. This is typically what happens. What can you do over a market cycle? What can you do over a decade? Are you consistent or did you get lucky? A lot of people get lucky. Somebody's going to win Powerball, you know. That doesn't mean they're a good investor. That means they got lucky. So if you catch a trend, can you replicate it? Can you continue to do that? Can you, or did you get lucky? Now, being lucky is good too. You know, you still have if you take your profits, you're still can be wealthy, but can you replicate it? And so what we're looking to do as being an active investor, again, I've said it before, most people should just put their 288 a payday not into an S&P fund, but into a low-cost world equity fund that constantly keeps you, that balances to out the whole world, and you'll probably do 7% to 9% a year, dividends reinvested. That's what most people should do, passively invest. Okay? That's what your Edward Jones guy, he'll try to put you in the 60-40 or whatever, 70-30. Probably that's what most people should do because they just don't have the acumen, the knowledge, emotional makeup, psychological makeup to be an active investor because it's a roller coaster and you can get dragged into, FOMO and get rich quick, greed, and then fear, and just like these charts, your emotions and psychologies constantly. But if you are understanding history, if you understand and have modeled what successful investors throughout history have done, the commonality is there. Buying things that are undervalued and letting the market bring them back closer to a valuation that's reasonable. Okay, and that can or buy like I do or try to do in actionable intelligence, buying things that are undervalued, that have some type of catalyst for them to go from being out of favor to back into favor, or from horrible to slightly bad. And they don't necessarily have to go to excellent. That can happen. That's even better. But, something that's blown out. This is why I'm bullish on China. So everybody hates it. Everybody has a reason why China is going to dry up and blow away. I don't agree. I think that I have a contrarian view. But when I see things like this, I can't be a buyer of semiconductors when the charts look like this. This is crazy. It's a bubble. And so I hope that people, you know, that got in and made their money, took profits, because it will not keep going straight up. Now the argument would be, well, it could level off and then make another leg higher. Fully possible. But, what are the odds? What's the probability of that outcome versus a big correction based on what we've seen before when things get this far out of whack? That's the question you have to ask yourself. So this is Fred Hickey. He writes a lot about gold and high tech. Um, he doesn't even have a website. You have to like mail a check to him to get it on his newsletter. I don't get it, but I mean, I wish this guy would like get on Substack, but he chooses to be old school like this. I guess it's kind of a selection bias. You have to like make an effort to actually subscribe. But anyways, this is what he said, and I agree with this. It says, this is a couple days ago when he wrote this on X. 24 hours from now, the national debt will top 36 trillion. It exceeded 35 trillion just 3.5 months ago. The U.S. government spent $584 billion in October, 79% more than it took in receipts during the month. Worse yet, today the Republican-controlled House passed the Social Security Fairness Act, another ill-advised expansion of entitlements, which per a CNBC report, quote, would add an estimated 196 billion to deficits over the next decade. The Congressional Budget Office has estimated it would also move Social Security's trust fund depletion dates closer by an estimated 6 months, according to the Committee for a Responsible Federal Budget. It has the votes in the Senate and will be signed by President Biden. And he goes on to say what I've been saying for a while and why this won't be solved until you have a crisis. There is no longer a constituency in Congress to slash spending without a crisis. We can thank the Fed for that. The blue dog Democrats are gone, so too most of the Republican deficit hawks. Notwithstanding the Trump honeymoon market euphoria and the new Doge department, he says here, I wish them well, we remain a nation of deadbeats. And it goes on, I didn't put the whole article, but basically why, gold uh, is still a long-term, going to be a long-term beneficiary of this. So this is it. We'll see what the Doge guys do. We'll see if there's, you know, going to be any kind of major reforms, if there's going to be a cut in defense spending. I think I saw a chart this week where defense spending in the US and in Europe as a percentage of the overall GDP is at record lows. So there's going to be, with all of the threats, you know, perceived threats, the boogeymen that are hiding in the woods, there's going to be a call for more spending. We just don't have the money. And like I said, people say, well, they can cut. There's so much fat. That's the comment of someone that doesn't understand what's happening, that doesn't understand that three-quarters of the spending of the federal budget can't be cut. Well, it's not politically possible. They're entitlements and, forced spending, and you're certainly not going to cut defense. We already talked about why. So this is why I'm not too optimistic, notwithstanding all of the recent euphoria. But nothing's really changed. And every day that goes on, the debt gets deeper and deeper. And now you have, the idea was, well, we can cut rates and get the interest expense down. It's like if you do a balance transfer of your high interest credit cards that you're paying 20% on to a 0% credit card balance transfer, but it's only eligible for 6 months. And instead of, taking that increased interest expense savings and paying down the debt when you had the opportunity to, when you had 0% on that balance transfer, you continue to spend. And so the hole gets deeper. And now your options, the amount of options that they have now in DC are getting less and less to deal with the problem. And this isn't a knock on any particular, this is, there's not much any president can do about this. There's other there's other arms of the government, and it's actually the people. Again, I've challenged people to sit down with your grandparents at Thanksgiving dinner. It's coming up in a couple weeks, and talk to them about entitlement reform and listen to what they tell you. And then tell them, show them the Nestor verse, whatever, I can't remember the Supreme Court ruling in the 50s where they already said that this is not an entitlement program. It's a welfare program, and it's subject to being changed at any time by the Congress, and see how that goes down. You'll get an emotional response. You'll get a rhetorical response. You won't get, well, really? They can change, they've changed it many times. They've raised the retirement, and they're going to be doing more of this going forward. They're not going to have a choice. So this is the big news this week in uranium. Russia, I did say this in parentheses, temporarily bans enriched uranium exports to the West. I think I read that 14% of our enriched uranium comes from Russia. I don't know, that's not overwhelming, but it's not insignificant. So do I think this is temporary? I think this is starting to play these, people are starting to play their cards now. Okay. The United States, you know, needs this uranium. We were talking about banning imports, remember, 6 months or a year ago. So the Russians just went ahead and said, we're just going to ban enriched uranium exports to the West. And so we're going to see more and more of this jockeying. I want to go back to what, a lot of the founding fathers said our foreign policy should be: trade with all, be friends with all, don't make enemies. Okay. Because we have these two moats around us. No one's going to sail here and storm the beaches of Myrtle Beach or Daytona Beach and take over the United States. And so we should be making decisions that are advantageous for the United States, and we're not doing that. Okay. We're antagonizing people. I'm not going to go down the rabbit hole. I've talked about this before, but when you have 19% of your baseload electricity is nuclear, when you have a nuclear powered submarine deterrent, ballistic missile deterrent, and all your aircraft carriers, for the most part, I think they're all nuclear now, but there may be one or two that are conventionally powered. You're not in a position, you have no domestic uranium industry. We do have enrichment here, but it's not, sufficient. And so we're ill prepared. This is the kind of policies that government should be talking about. Okay. I was just talking to, I just got interviewed the other day, and me and the guy that interviewed me were talking about, he's getting ready to go overseas and check some stuff out. And it just reminded me, when I travel around, what a dump the U.S. is, the major cities. Yeah, there's a lot of nice places, but our infrastructure is horrible. Okay. Our bridges are falling down. You see these videos on TikTok or YouTube when you see the Chinese building a bridge, or they do these places in other countries, these infrastructure things where they build something in a week, or the ability, the nuclear power industry taking it back to nuclear power that we should be dominating worldwide, we're behind on. And so can we catch up? Yes. It's going to cost trillions of dollars and years. In the meantime, we're sitting here on our laurels. Now, for me individually and us as investors and speculators, this is very bullish, as I'm going to talk about. It's going to continues to be bullish for uranium. But uh, for the overall well-being of the United States, it's stupid. We have had a lot of stupid people for decades worried about stuff that doesn't matter. So this is, the consequences of a multipolar world. You want to hold on to your hegemon. You don't understand that you're in decline, that the rest of the world, even if we were, number one in everything, which we're not anymore, um, this is, us running around the world antagonizing everyone. This is what it leads to. Kazatomprom shareholders approve uranium supplies to China's CNNC overseas and CNUC. These are the nuclear companies in China. So basically, over 50% now, this is ratified the deal that has been talked about before. Over 50% of Kazatomprom's production is going to be going to China. This is partial consequence of a multipolar world and the growth and cooperation of the global South and East. So, you know, we're in a world where, and I'm going to talk about a little bit later, where uranium supply is not sufficient for everyone. Again, the music's playing. Remember in kindergarten, five chairs, six kids, and then the teacher shuts the record off, and everybody's got and then one kid's out. Then you take a chair away. That's what we're heading for. Okay, musical chairs. It's not going to be enough uranium for everybody. The price of uranium is going to skyrocket, and people still haven't. The industry, evidently, from what I'm hearing, still hasn't acknowledged this or recognized this. I'm talking about the utilities. So it goes on here what the article says. Ka Kazakhstan's national nuclear company said in a press release that a spot contract would be concluded for the sale and purchase of natural uranium concentrates between Kazatomprom and CNNC overseas, and a long-term agreement for the sale and purchase of natural uranium concentrates between Kazatomprom and CNUC. Kazatomprom said in the middle of October that it had reached an agreement to supply U-308 uranium concentrate to China, basically on market terms. The value of the transaction, combined with previous agreements with CNUC and CNNC overseas, exceeded 50% of the total balance sheet value of Kazatomprom's assets. Are you getting it now? Do you understand the great game? Do you understand the implications of this? You're not going to put China and India and these things back in a box. Their economies are too big now. They continue to grow. People say, well, we're going to have a trade war with China. Okay. China trades more with the rest of the world than the U.S., especially in Asia. Go ahead and have your trade war. This is a consequence of the belligerence of our foreign policy and our arrogance. And people don't like to talk like that. So you're talking like one of these liberals. I'm just telling you how it is. I'm not the one, the FT was the one that had the chart which showed that the United States had 60% of the emerging market countries in the world under some type of sanctions. And to go around and, uh, tell Uganda to get rid of their, anti-homosexual laws. Why do we care what Uganda does? Is it unfortunate for homosexuals there? Probably. But why don't we focus on the US and fix our problems? It's a lot better to pull the plank out of your own eye and instead of worrying about your neighbor's problems. Okay. But people don't get it because we're the US and we've had decades of that and we're number one and that's what we do. So this is the consequence and this is going to continue and the screws are going to keep getting turned. Nobody needs the US anymore. We're going to get smaller and smaller as a portion of the overall global GDP as the rest of the world continues to industrialize, continues to urbanize, continues to move towards getting wealthier and wealthier. And if we want to be antagonistic and belligerent, we'll just get frozen out, including evidently uranium supply from Kazakhstan. And this is the problem. This is a chart from Encore Energy. We don't produce any uranium here in the US. Okay, here's a chart here. I can't really see it. I didn't blow it up, but basically 200,000 pounds last year in the US. And you can see for the last, 5 years, we don't really do anything here. Here's the increasing US demand. We have increasing U.S. demand of 48 million pounds a year, and we don't produce anything. You see, back in 1980, we produced over 40 million. That was 44 years ago, and it's been in constant decline. And it's been filled with imports. But yet we have the Russians now temporarily banning enriched uranium exports to us. Kazatomprom has turned to the east, to China and Russia, and we don't produce anything. Now, I'm not saying this is an imminent danger. I'm not saying that. What I am saying is that this will become a problem the longer this goes on. These deficits of production, which is a worldwide phenomenon, by the way, not just in the US, of 30 to 40 million pounds a year cumulative. It builds up. And as you're increasing, I think everybody kind of acknowledges now that, we're in a nuclear renaissance, if you want to use that word. And so you have to ask yourself, the industry's just not set up for enrichment, for supply. So if you're an investor or speculator, this means higher prices. And I'm not going to entertain anymore. Well, you've been wrong, and Justin Hume's been wrong, and all these people have been wrong. Look at a long-term chart. We measure this in years, not because you just woke up and found out about this 6 months ago and it hasn't went your way. Not interested in having that conversation. My life has changed because of my uranium investments. A lot of people's lives have been changed. Okay. And this is the best setup of anything out there right now as a speculation slash investment, in my view. And the fundamentals continue to get better and better and better. So mining's hard, right? We've had reports recently, Paladin had to cut their production of uranium. Stock got nuked. They're just processing stockpiled material. They haven't really even got into the major mining yet, and they're already having problems with the plant doing processing. Not good. Cameco cut production estimates. Kazatomprom had problems. Energy Fuels, UR Energy. I think Peninsula I just saw recently last week. Every company's having problems. The only company that I think is not really having major problems is Encore Energy down here in Texas. But, they're talking about ramping up to like 1 million pounds. I think they've got both their mines up and running, probably one of the better management teams. And this goes back to what I've said before years ago. And I've been saying this, and more people have been saying this as they interview these managements. There's a shortage of personnel, trained personnel. There's a shortage of talent. Again, how many competent, experienced uranium mining teams actually exist in the world? Again, I don't think this problem is going to be solved on the supply end until the price gets high enough where you have major mining companies that actually know what they're doing getting involved in big projects. When you see Rio Tinto or BHP or Glencore or the Lundins or somebody said, okay, the price of uranium's 200 million pound or $200 a pound, what have you, and this makes sense for us to get involved in this now. But even with these little ISR problems, they're having all these issues. If you kind of delve down and listen to the stories, I think one of the mines I was listening to is so remote. The people that were working at the mine were trying to get it up and running in the winter. They got blocked. They had to get snow plows in there to unblock the road. The people were like trapped at the mine site I mean, it's all these little things. I think even Encore Energy had some problems recently, not being able to get enough qualified drill rig operators and drill rigs to drill their ISR and injection wells down here in Texas. So it's always something. And so, you spend money to train somebody and then they start shopping their talents. These kind of guys, a lot of craft guys in a booming industry, they'll drag up over $1 or $2 an hour. So you spend all this time and effort getting somebody up to speed, and he says, "Hey, I gotta go, man. These guys, I'm making 25 here. They're offering me 28 over there. I'm out of here. Hook up my fifth wheel and I'm gone." Seen it many, many times. So this problem isn't going to go away anytime soon. And so this puts even further constraints on the supply of uranium because mining is hard, which we've said. We said that this would be a day of reckoning as people transition from the days of, just putting up flashy presentations. We're going to do this, we're going to do that. Here's our projections. Here's our all-in sustaining costs. And then the actual execution isn't going well. You see what happens because this is hard. I mean, this calls for me a lot of possible consolidation. I mean, you really have to consolidate, I think, these companies, marginal producers, small producers. And I think you're probably going to see that at some point because there's just too many of these little rinky-dink million-pound per year ISR. Just consolidate three or four of these things and get the professional management. This is what I hope that Encore does. I think they're probably one of the top ISR management teams out there, but they're kind of busy right now doing their own thing, get ramping up their stuff. So there's only a limited amount of bandwidth that a management team has before they start getting spread thin, and then their execution suffers. So we'll see what happens. But again, this is just another brick in the wall of a fundamental story that's the best story I've ever seen. So here's Triangle Investor again on X. He does a lot of interviews. I think I've been on his show once. John Campaglia, the guy that's the CEO of the Sprott Uranium Trust, knows a lot about uranium. Here's what he says, quote, "We're a little bit confused sometimes around the utility behavior," unquote. "We would have thought that their urgency to buy more uranium would be higher, given the risks to the supply chain, given some of the production challenges with the restarts, and given the long timeline to get new mines online. The market over the next 4 to 6 years is going to be very supply challenged." He also said that when he went to the WNA conference, that he has been saying and telling these utility fuel buyers, do not count on being able just to go grab the treasure trove of the Sprott Uranium Trust and we'll just sell you that. If it gets down to it, the government could mandate they sell to the utilities, or they could come up with some situation where utilities borrow some uranium from them, but this has to be voted on by shareholders. There's no provision for that currently. Can I see something like that happening? Or you uh, basically say, okay, lease us, £1 million, and we'll pay you back at this interest rate. I mean, I think that could happen, and but we'll see. There's all kinds of ways to squeeze more juice out of the lemon, but we haven't seen that yet. And that doesn't solve the problem. That's like taxing billionaires. You get a one-time windfall, and then what do you do? Bottom line is billions of dollars in about 5 years needs to go into this to solve the problem. And we're not seeing that. We're not seeing the big time mining company because it's such a small industry. Okay, that's part of the problem. So this really, this is why I've told people, your visions of sugar plums of your 25-cent junior explorer, uranium explorer going to $10, it could happen. But, having an investor mentality and seeing the fundamentals, this is why I think Cameco will do well, continue to do well, and that's where the money will come in as this market heats up. Okay, I mean, Paladin can't even get the plant running on mine stockpile. Forget about actually mining uranium. So, you know, this is a problem. And so shifting to the demand side, here we have an article from Energy Wire. It says US can squeeze nuclear power equal 9 plants out of existing fleet. EPRI finds. It says this is a think tank around energy. I think it's the Edison, I can't remember, Electric Power Research Institute, something like that. Anyways, it says adding new nuclear energy has become a strong bipartisan priority as rising power demand threatens to hobble the constrained power system and disrupt efforts to lower emissions. And so you could do things like, upgrade the equipment in the plant to bigger steam turbine, eh, bigger steam generators, extend the life of the plants, different things that can be done engineering wise that you don't have to build a new plant. And so that's going to, if you do that, that increases uranium demand. So you have all these constituents for increased demand, not just new plant builds, but extending the life of reactors, bringing back idled reactors, increasing the output of reactors. All of these things that can be done that are going to put even more uh, demand on on, on the ability of these miners that are stumbling to produce more uranium. That doesn't even talk about the entire fuel chain of enrichment and other things that are constrained also. Now with the Russians, who control like 40% of the world's uranium enrichment capacity, going to temporarily, again, I say that in quotations, suspend exports to the U.S. So I think you just have to be patient and you'll do fine, but people aren't patient. That's part of the problem. So obviously, I've talked about China recently. I think a lot of people, if you talk to them, say, well, I'm speculating on China. I think it has the ability to surprise people. I don't think it's, you know, necessarily going to collapse like people think. And so people say, well, what about the fact that it's a communist country? Okay, well, it has a, I guess you could say the Communist Party of China controls it, but I wouldn't say it's a, anybody that you talk to that actually goes to China is really impressed with what they see there, the uh, modern buildings and infrastructure and the technology, and you have a lot of things going on there. Did they have a massive real estate bubble and financial sector bubble? Yes. In the banks, yes. Does that mean the country's going to drive and blow away? No. When we have this amount of pessimism, people say, well, it's a communist country. They had this happen. They're going to start a war over Taiwan. I personally look at a guy like Trump, like Nixon. When Nixon first went to China and there was a détente, he was able to do that. And I think Trump's going to cut a deal. I think there's a lot of rhetoric right now, but I think he's going to sit down with the Chinese and they're going to come to a mutually beneficial uh, agreement that will be at least perceived that way, that will avoid a trade war because Trump's a deal maker and Trump likes to make deals. Okay, uh, he will use tariffs and the threats of tariffs and import quotas and things like that as sticks, but I think there'll be carrots also, and I think a deal gets done. Not only that, again, you know, as Louis Gove said in his presentation when I was on the Cuppy's event-driven monitor monthly presentation that they bring the guest on, he went through all the industries that are beginning to dominate and the technological prowess of the Chinese, using examples like BYD, I think it's Huawei, the phone maker, all these different things that people aren't paying attention to. And so, you know, do I think, in the past we've seen the Chinese come in with these massive liquidity injections. They've been doing it more incrementally this time. And so that's why you're not seeing like copper and oil and iron ore take off in price because they're doing more targeted. They've basically want the stock market to go up. They've targeted, as I pointed out in the newsletter this last month, the paid newsletter, Actionable Intelligence Alert newsletter, available on Substack. I pointed out how the emphasis has been on, getting people to not necessarily invest into properties, but into the stock market. So they've really incentivized people to do that. Am I in agreement with that? Do I think that's a good idea? Probably not. But they've had a record amount of people opening brokerage accounts. I mean, when the Chinese want something to happen, they make it happen. If they wanted to have a nuclear industry, they have one now. They want to do something, they put it in a 5-year plan. If they want the stock market to go up, I think it's going to go up. And you see in the past, just over the last 20 years, 21 years, that if you do get a breakout, they can be pretty substantial. And we're trading well above the 200-day moving average. We're bumping up against some resistance here. This is just the Chinese A shares. I'm not necessarily invested in those. I listened to like the Alibaba uh, conference call, a little bit of it. They're buying back a lot of shares. Okay, so a lot of things are happening under the radar that I think, you know, we've already had a kind of a decent rally. Does that mean we have a, like we had in 2014, 15, a big move upwards, or what we saw in 2006, 2007, and 2008 into the GFC? Do we have a big move like that from 1,000 to 6,000? I'm not saying that, but it's worth watching. And I think that there's a possibility for a big contrarian move here. Because again, most people, I think their views are skewed by their bias from whatever information they're taking in, especially if you're in the West or especially in the United States. So we'll see if the rally is sustainable. I think I've picked some companies. I added three companies uh, to the portfolio, the Actionable Intelligence Alert newsletter portfolio, tracking portfolio that I think are going to do well, uh, regardless if this is a big breakout stock and stocks, Chinese stocks. They're profitable companies. They're well-known companies. They have the ability, I think, to move forward and produce good good returns for the portfolio, regardless if we have a big move higher in Chinese stocks. So I saw this on infographic. I thought it's interesting. I've talked a lot about what a lot of people don't realize is the history of investing over hundreds of years or thousands of years was mostly focused on tangible assets, right? Um, Real things, commodities, agriculture, plant equipment, buildings, real estate, things like that, right? That's where a lot of the wealth was. And you see that even going back to 1975, where you had this infographic with like blue representing financial assets and this kind of like concrete colored concrete really real assets. So, you know, in 1975, tangible assets dominated, investment portfolios, right? And um, or total assets. And then you saw this move, which basically the financialization of the economy actually began during the 80s, during the Reagan administration. There was a lot of deregulation around the financial industry. Uh, this interest rates came down from, super high rates, 18%. The long bond was in a 40-year bull market. This also incentivized, right, because as bond yields came down, um, it made it more incentive. The incentive to invest in stocks was higher. This creates more financialization, more products come out, things are more financialized, and it just builds a trend, right? Because success breeds success. And you see over, in particular, basically from basically the 80s and early 90s, where we had a major shift over like 20 years, where we shifted from tangible assets to more financialized, and it's just gotten worse. We're to the point now where um, intangible assets only account, or intangible financial assets account for 90% of the S&P 500 total assets. And I think that's going to reverse now because we're going into a era of higher inflation, higher interest rates. And so I mean, look at bonds, they're getting killed. People still don't seem to understand. A lot of people don't understand the relationship between higher rates and bond prices. They're inversely correlated. That doesn't mean, if you buy a 10-year bond and the interest rates go from 3 to 4, you're going to lose the bond's value if you sell it. You'll still get paid your interest, but what's happening with inflation? What's your real return? People don't understand these concepts: real return, nominal returns, real interest rates, nominal interest rates, inflation, what inflation actually is, Cantillon's effect that I've talked about many times, that I'm a big advocate of, the intermarket relationship of interest rates with currencies and these things. You really need to understand these things because, again, and if I'm right, we're at such an extreme now where I think that we're going to begin to see a shift more with less financial assets and more tangible assets. And I think this is really illustrative of what's happened during my lifetime. And I think if I would have understood this better, I think I could have done a lot better, investing in like insurance companies, banking, at certain times. But I think now we're shifting back the other way. I think we're at an inflection point with the debt that we have that's going to lead to more inflation over time as the only really politically palatable way to deal with the debt that we have. And I think that's going to be beneficial for tangible assets, and it's going to be negative for financial assets. So this will be the time that if you don't like my political commentary, you should leave the presentation. I will pause for a few seconds as you do that, and then I will go into a little bit of commentary. So I thought this was in the Mail, Daily Mail online uh, from the UK. It's just the headline. I didn't read the article, but I thought it was illustrative. I put this title of this slide, "A Generation of Weakness." It says Ivy League students offered crayons, Legos, and cookies with milk to cope with Trump's election win. I mean, this is part of this is the ultimate, this is really a fundamental issue with the United States, okay? These Ivy League schools are the epicenter, the hatcheries of the whole techno state of our so-called elite in finance, science, political class. And this is what you have. I'm watching, I think it's interesting. I've caught this a couple times on YouTube. They have people that do like reaction videos. They'll watch a movie and they'll react to it. They claim they've never seen the movie before. And I think in many cases it's true. And then they watch the movie and you can see their reaction and how they're reacting to it. And it's interesting to watch like younger people, guys and girls, but especially like gals that are in their early 20s, watching like Saving Private Ryan, the initial sequence. I think it's the first 10 or 15 minutes of the film, 20 minutes, whatever it is, of the storming of Normandy Beach by the Americans, Omaha Beach in Normandy, and just the effects, you know, and seeing the expression on their face and crying and shock. They just don't understand it. And that shows you how disassociated several generations. We had a generation, what they called the greatest generation, people that storm the beach, or if you watch Flags of Their Fathers or stuff like that, these shows, or Band of Brothers and that kind of stuff, and what, people were doing and the difference. People are being offered crayons, Legos, cookies with milk because we had an election like we've had every 4 years, and people are so upset. And then, not only, 80 years ago, you had men storming Normandy Beach. It was funny, not funny, but it was, if you watch that, or I mean, I'm a World War II and buff. I mean, I was aware of all this. I mean, I used to say this with some of the weak guys that I had working with me. I wouldn't say weak, but younger guys. They were really kind of soft. They were a little bit, they're just a different generation, come different, as wealth and comfort continue in a society, people get weaker over time. They get they get disassociated from the depression era and hardship and stuff like that because their life is easy. And so I'd say stuff like, if I was on a landing craft with you guys and we were going to storm like Iwo Jima, you know, running in, as soon as the landing craft hit the beach, the doors came down or the ramp came down, I would pull up my service revolver and blow my own brains out because there's no way I would want to storm the beach with you guys. And so this is, we kind of make jest of this, or but this is part of the problem, right? Um, Now, I think that the country's bifurcated along this line. There are a good portion of the population that live in small towns or rural or blue collar workers. I work around, or when I was working around a lot of blue collar guys that turn to, they have this, for the most part, like in construction and stuff like this, or certain trades that I was around, like these crane guys, riggers, and iron workers. They take a lot of pride, and they take a lot of pride in their toughness and their ability to do a good job and whatever it takes to get the job done mentality. And these kind of guys don't really coddle, or if you're a non-hacker, you're not going to last. It's the same thing like on drill rigs and stuff like that. And so farmers, people that, I've been driving through fields going home late and see tractors out there with headlights on, and the guys are doing whatever they need to do to get the job done, right? This kind of stuff. Or if you're on a, if you're working in some of these things 7 days a week, if you're on a dairy, these things. So when I see something like this, this is where a lot of the problem is that, you know, we need a change in mentality. This is why I think it's important. One of the things that came out of this theme of this election, in my view at least, is maybe we're going to get some people with a different mentality, not this, uh, soft, weak, entitled, coddled mentality of the Ivy League, where a lot of our establishment people come out of, your foreign policy people. I mean, this is the track you have to be on to get into those positions typically, right? To be a big shot in the government or in Wall Street. I mean, a lot of these people come out of the same thing, and this is the mentality. I'm not saying everybody there, but this is ridiculous. If this is like something you would see on like The Onion or something, but this is true. And so I think if nothing else happens, that we get a sea change where we get more realistic, more optimistic, more rugged type people. You know, Mr. J.D. Vance coming out of Appalachia. I lived in West Virginia for several years and saw Appalachia. Good people. I saw the struggles. I see how people react. You know, you just got to keep moving the football downfield. That's been my mentality. You're always going to have struggles. You're always going to have things you don't like. You're always going to have uh, ups and downs, right? That's one of my uncles said that life is a series of ups and downs. It's how you deal with the downsides, right? How you're able to adapt and overcome, how you're able to react. If you get knocked down, if you get back up. I think I'm fortunate because of just my familial background of where my people came from and how the hardship was instilled into them, and how they passed on the mentality. I mean, it was not acceptable to be like start crying and, I don't like this. This sucks. I need to go get cookies. And I mean, it just wasn't going to be allowed. There was enough. It just wasn't going to happen like that. I mean, I don't even know how to explain it. You just would have been like, what's wrong with this guy? So, that's why I think we got to bring back peer pressure. This is how it works on a lot of these crews I was on, peer pressure. If you're a non-hacker, nobody's going to beat you up. You're just going to know that you don't belong there and you need to go somewhere else. And that's why I think we need to bring back more social opprobrium and peer pressure and say what's acceptable. And this isn't, behavior is not acceptable and you're a non-hacker, go away. And that's it. We don't coddle this. But we'll see what happens. We can look at these things and laugh, but this is really serious, right? Because, hopefully we may have seen, I think a lot of younger people are getting it now. I just was amazed. I think a lot of people did really good work going to these campuses and talking with these kids, at least planting some seeds. And I think that a lot of, not necessarily millennials, but the generations that are coming after seem to be a lot, they can see what's happening and people are, are reacting, saying, look, this old way is not working. So it's kind of that whole fourth turning thing, if you will. So we'll see what happens. Again, you can't make generalizations. You can just look at trends. But I think half the population, a good port, not half, but a good portion of the population is soft like this. And a lot of these people are on the left, but this is where you draw all of your establishment folks from, is the Ivy Leagues. And so if they can't get through, we have elections, whether you like it or not, we have them. And the people, what I find interesting and why I'm optimistic going forward is because the Democrats just don't get it. Okay. It has nothing to do with racism or fascism or this guy's this or this guy resembles that. It has to do with the fact that you are putting forth policies that don't resonate with the voters. This, America first, putting Americans above everyone else, is what you should be doing. The job of the government is to try to make people's lives easier, not harder. And selling things out to the globalists, selling things out for to corporations, to an oligarchy that exists, people are wise to it now, and they're not interested in that. And so, if you want to blame certain ethnic groups or, you know, I've heard all kinds of excuses. And so maybe that's just part of the grieving process, but you need to bring back those blue dog Democrats, those conservative Democrats, okay? Um, and but that means you have to, basically disassemble this whole progressive nutty uh wing of that party. And I'm just not seeing that yet. So we'll see what happens, but I thought this was amusing, but it's also kind of instructive. Okay, guys, that's it for this week. Appreciate you stopping by. Appreciate the support. Again, if you are interested in the what we talk about here on a weekly basis, you can go to Substack. I have a weekly email I put out where I curate a lot of great information. It could be podcasts, videos, articles, charts, what have you, things that I found that were interesting and similar to what we're talking about in these weekly videos. And that's kind of your gateway drug into the Actionable Intelligence Alert paid newsletter, where we actually have actionable ideas, real ideas on how we're taking advantage of the themes and ideas that are discussed in these weekly videos and in the free email. So feel free to avail yourself of those products, and we'll talk to you next week. Thank you.